Berkeley Group leadership reshuffle signals strategic shift. So Rob Perrins taking over as executive chair at Berkeley Group signifies a significant leadership change with potential implications for strategy, growth ambitions, and industry-wide delivery in the UK property sector. So Rob Perrins to become executive chair, while Richard Stern steps up as chief executive, signaling a shift in leadership at Berkeley Group. Berkeley Group reported £529 million pre-tax profit last year, with an improved operating margin and plans to invest £5 billion into new sites and a build-to-rent platform. What's not said here is that £529 million is 5% down from the previous year. And Perrins emphasizes the importance of navigating cost inflation, regulatory changes, and ongoing process issues to deliver on growth ambitions and support the government's brownfield-led housing agenda. So Les, anyway. But yeah, the build to rent obviously getting mentioned again, reshuffling of the team. They are down on 2024 to 2023, it would seem, by 5% on their pre-tax profit, but up on the margin. What do you guys think? Do you reckon this is the start of a shift we're seeing from these PLCs to start thinking of a whole different way to manage the business as like asset managers for long-term retention, with these build to rent swaths compared to the inventory game of like selling huge stocks of houses? Do you reckon we're seeing the start here of kind of like a bit more leadership competition in the PLCs, or it's just a change in management?
I think they've been listening to our podcast, mate, and they're taking a strategy out of our free books and building up their build-to-rent portfolio, because it's the only way to make money in the property industry, in my opinion.
Yeah, I mean, development's hard work in a world where it's becoming less affordable to be able to buy, and they can't go in and change, a lot. They either forgo their margin and reduce their prices, or they bring out their own lending entity that can help people buy, but they're still going to struggle in that capacity. So, build to rent is the way. His background is actually he's a chartered accountant, which is really interesting. His background is he was, built a building site or went through, the planning department or the construction department. He came from a financial background. It's really difficult to comment without knowing, until you've met these people that are running at that level and understand, and maybe there's an interview with him somewhere where you can get a little bit of a sprinkle of where his skill sets are at. But it's just a massive beast now to, that profit margin to be managing as a one person at the top of the tree is crazy and difficult boots to fill, because Pidgley was, he was dialed down, P&Ls and balance sheets every week on every site. So I feel like they are a very numbers driven business. So it makes sense, whatever strategy they're doing.
Seems to be the way. I think as these PLCs start moving in that direction and become more public with it, I do think we're going to see different moves in the market. And they seem to be focused on brownfield as well, Berkeley Group, delivering on brownfield ambitions. But it's a great read. Anyone who wants to go and have a read up on the Berkeley Group transition there and their forward-thinking plans. Build to rent, brownfield, working in lockstep with the government to deliver on housing. It's quirky time to be a property developer.
Threat to them as well, though, because obviously the biggest thing that's going to shock them is the cash flow and what they built their business on build to sell, and obviously that cash flow is going to deteriorate, and obviously less they can work with the government and set our own bank up. But I mean, look at Octagon Homes, they pivoted into the Chancery Group, tried to go into more affordable housing. They lost their strategy, and what they stood for was to do quality, unique, bespoke, smaller developments, and it led them to hot water and then to liquidation. So it is a scary time when you change strategy on a big oil tanker like that.
There's a fucking oil tanker as well, yeah. How long have they been around? How long's Berkeley Group been around now? 40 years?
Pidgley probably was just pushing 85, and he probably set it up. Yeah, I would have said probably 45, 50 years ago. 1976.
50 years. Mad. Well done. Mad. Anyway, yeah, we talk about it quite a bit on this podcast, about sort of strategy and where things may be going from the macro side of the property sector, and it all seems to be going the same way. Is the money is in retention. Doesn't mean retention is all there is. Flipping will still work, and there's all sorts of strategies that will work, but at scale, it's about retention now. Costs are too high.
I will just add that in for an SME property developer in the south, like we are, so home counties. Build to rent doesn't work for us. HMOs work for us, but flats, houses doesn't work. It's just you end up not making any money on them, and we need to get rid of them.
Apartments for us could be worth like 80 grand. You guys can get a garage in fucking the home counties for 80 grand. That's mad, isn't it? But yeah, Yield, baby.
We've got a flat that almost rents for like 35 grand a year.
It's mad, isn't it? One flat. That's like a HMO for us, 6-bed HMO. If you enjoy content like this, then make sure you go and subscribe to the Ground Up Podcast.